Hello, and welcome to today's annual FASB-GASB webinar geared to academic professionals. We're really pleased to have you all here today, and we hope that this webcast is informative and educational. I would also like to add our disclaimer that all views expressed today are those of the speakers. Official positions of the FASB and GASB are reached only after extensive due process and deliberations. Next slide, please. My name is Jeff Gabello, and I'm a supervising project manager at the FASB. I will be the moderator and also a presenter on today's webcast. Joining me today are two speakers, Tammy Waymeyer and Jeff Mechanic. Tammy joined the GASB as Senior Research Manager in February 2023. In this role, Tammy leads the research efforts of the GASB, both internally and externally, through engagement with the academic community. Prior to joining the GASB, Tammy served on the faculty of Middle Tennessee State University, first as associate professor and then as professor and the MTSU Accounting Advisory Board Outstanding Professor of Accounting. She taught governmental and nonprofit courses throughout her career, and her academic publications focus on governmental and nonprofit accounting and auditing topics. Jeff Mechanic is a senior project advisor for not-for-profit entities for the FASB. In that role, he provides organization-wide technical and strategic advice on standard-setting activities affecting the not-for-profit sector, guides and facilitates stakeholder outreach with the sector, chairs the FASB's not-for-profit advisory committee, and participates in some of the FASB's broader educational activities. He has extensive experience in the not-for-profit sector and has been with the FASB since 2006. I have been with the FASB since 2014 and mainly worked on hedge accounting issues. In early 2021, I joined the not-for-profit team and am also the coordinator of the not-for-profit advisory committee. I also lead the research and technical projects on the statement of cash flows. Next slide, please. Before we get into today's webcast, I want to get a few housekeeping items out of the way. There are a number of ways to download the slides. They can be downloaded by clicking on the link in the chat or downloading them from the FASB's website by clicking on Educational Webinars tab in the News and Meetings header on the website. They are also available on the GASB's website by clicking on the Educational Webinars and Videos tab in the News and Meetings header. The slides are uploaded in PowerPoint so that you could use the slides in your classes if you wish. Next, to ask a question, type your question into the Q&A feature on Zoom. We will try to get to as many questions as we can on today's webinar. The presenters, however, may not have time to answer all questions today. Please note that both the FASB and GASB offer a free technical inquiry service. The webcast will be archived on our websites for 1 year. We will discuss more about CP credit on the next slide, but just to let you know that CP credit is not available to those who watch the archived webinar. Next slide, please. CP credit is only available to those who view the live program. Today's program will be worth approximately 2 CPE credits. CP credit is also not available for group viewing. To receive CP credit, you must stay on for the required number of minutes. This webinar will be 100 minutes to get approximately 2 CPE credits. We will also stay on for another 5 minutes just to be sure that the time requirement is met. Additionally, you will need to respond to the required number of polling questions. We'll be asking 8 polling questions in total, and you must answer at least 6 of them to get the 2 CPE credits. So there's a little leeway there in case you don't answer all of them. You should receive your credits in the next 2 weeks. Next slide, please. I just really wanted to go over the learning objectives for today's webinar. First is to obtain a general understanding of GASB activities, including issued statements. Secondly, to obtain a general understanding of FASB's activities, including ASUs that affect not-for-profit entities, and also to understand teaching issues and research opportunities in a variety of areas. Next slide. And now onto our agenda. So the agenda is very similar for both the GASB and FASB in that we'll first talk about general news, and then teaching topics, and then timely research issues, and then we will leave some time at the end for Q&A. So that's all. Now for our first polling question. That's it now for the housekeeping stuff. So which of the following best describes your interest in today's webcast? Choose one of the following. A, teach government and not-for-profit GNP topics. B, research GNP topics. C, teach and research GNP topics. And D, neither teach nor research GNP topics. So we'll give you a couple minutes to answer that. It looks like we have over 200 people on the cat webcast right now. It's about 218, which is a good showing. That's really good. I think we've had usually have around that amount, and it's usually about 200 to 250, I'd say. So really pleased to have all of you here this afternoon, our time. And I know there usually are people who sign up from all over the world. So I cannot see the polling questions being processed, but we'll give it another few seconds. We're at 93% right now, so just give you another few seconds to fill that out, and then we could see we could release the poll results. Okay, so here we go. We have A, teach government and NFP, about a quarter of you, research government and nonprofit topics, a third of you, teach and research, another 13%, and then 31% of you are not involved in either. So I'm going to close that out now and turn it over to Tammy.
Thank you, Jeff. It's good to be with you all this afternoon. As we moved into the GASB portion of the presentation today, and think about those objectives that Jeff Gabello laid out for us, I want to talk about some general news within the GASB, and then what I think of as some teaching topics that might be helpful to you, both for government and nonprofit entities, and also timely research issues. And understand that the way that we've sort of carved out these topics, the teaching and research topics, you may hear something in the teaching topics, for example, that spurs a research idea. So we don't mean to be prescriptive with that, but just these are sort of our thinking around the buckets of things that you might do as an academic, either in the accounting space or public administration space. The other thing I wanted to point out before we moved into the general news is that when we think about timely research, because the standard setting process typically is pretty iterative, when I say timely, we'll talk about things that are on our minds at the GASB currently so that you can be thinking about those. But if you are interested in governmental accounting and financial reporting and you work on a paper in that area, there's a good chance that I'll want to hear about it. So as we move into the general news on the next slide, we'll talk a little bit about, I just want to highlight that, the FASB has been in existence for over 50 years. The GASB celebrated its 40th birthday in 2024, having gotten started in 1984. And so I want you to keep that in mind about the arc of the development of the organization over that time period as we move into the specific news on the next slide. And I think you'll see some things that indicate kind of the stage of development where we are. So there were 4 things I wanted to highlight in 2025 that I think are highly relevant. And in some of these, I'll mention things that would be good touch points with the academic community. But the first of those is that we formed consultative groups for 2 of our projects, for gap structure and for voluntary digital financial reporting. And if you're wondering about what those consultative groups are, we have consultative groups and task forces, and we have an advisory council. And I like to say we take the Beatles approach to it, that we get by with a little help from our friends at the GASB. And so those consultative groups are very helpful in helping us identify issues and help us wrestle with challenging issues like those that exist within the gap structure project, which is a project that is designed to evaluate the best way that we communicate what is gap for state and local governments. And so that project will result in something related to how we communicate what is gap. The voluntary digital financial reporting project is one that is unique as well. We've got a wide variety of stakeholders who are engaged in that as well. And academics can get involved in those consultative groups, task forces, and on our advisory council. So there's an opportunity for you to do that. I want to use this chance to encourage you to get engaged. The second thing I wanted to highlight for news out of 2025 is we wrapped up a study that I led on gap utilization among state and local governments. And if you're familiar with this area, then you know that all state and local government units within the United States do not have to follow generally accepted accounting principles as prescribed by the GASB, and the requirements sort of vary state by state. So that effort, that research effort that we did, had 2 objectives. One was to evaluate what the state requirements were for all the different types of units of government within a particular state, like counties, municipalities, special districts, school districts. That was sort of stage 1. And then we did a very academic-y kind of thing in the second stage. stage where for the states where there was some optionality where governments could choose to utilize GAAP or some other financial reporting framework, we developed a regression model that predicted whether those governments would utilize GAAP based on some characteristics. And one of those was the language within those statutes where it fell on a continuum of how much they nudged GAAP utilization. So I'm proud of our team. We presented that paper at an academic conference earlier this year. We are working to get it published. And if you're interested in it, that project, that paper lives out on our website. And so if you're interested in it, you can look at the full paper, or we actually have a condensed version, a condensed report that's like 8 to 10 slides, almost like a PowerPoint presentation that will lead you through the primary findings associated with that study. The third thing I wanted to point out that's relevant to you as academics, whether you're teaching in the accounting area or within public administration, is that we are working to finalize some educational videos that we initially started out with the idea that we would target elected officials who might need to better understand what's in an annual comprehensive financial report for governments. And we curated some topics, 16 topics that were related to that ACFR Annual Comprehensive Financial Report, and are working to record and publish those videos. And so what it will end up being is a series that you can watch all the way through. And each one of those videos, by the way, is only roughly up to 10 minutes at most, very YouTube-like. And if you watch all 16, maybe you're in for 2.5 hours, something like that. And that will take you all the way through the ACFR and hit kind of the high points. And so if you're teaching in this area, we expect to launch these videos in early 2026. So that will be a resource that is available to you. Because even though we designed them for elected officials, we know that this may be a help for the academic audience as well. The last thing I wanted to mention here by way of general news is that we are recruiting for our postgraduate technical assistants. So my friends at the FASB are recruiting for their PTAs as well. At the GASB, we always have 7 PTAs on staff, and those 7 PTAs contribute very significantly to our mission at the GASB. That recruiting deadline ends November 30th. It is a significant process where if you're the faculty member, there's some work involved in nominating those candidates, but there is still time. You've got roughly 2 weeks to do that. At the GASB, we love it when we have applicants who have an interest in the public sector. We know that they may or may not have had a governmental accounting course, and that's okay if they haven't. We welcome those applications. So those are the 4 pieces of news that I wanted to hit. And then on the next slide, I want to talk a little bit about our technical plan. And I don't mean to dive into each of these things. We'll dig into pieces of this later, but I wanted you to have one spot in the slides where you could see at a glance everything that we're working on. And I want to point out what may not be readily apparent here, and this is again thinking about something that the stage of our history on the left side of the screen, left-hand side of the screen, those are the things that the board is deliberating that may result in financial reporting requirements. So those are what you typically think of about what a standard setting board would do. On the right-hand side are things like research activities, the technology project, and our post-implementation review. And those activities are other things that we're doing that may or may not land in a standard setting initiative on the left-hand side of the screen at some point. And so the 2 that we talked about earlier were GAAP structure, which is how we communicate what is GAAP to our constituents. And then the other one is the voluntary digital financial reporting project. And that project is designed to build a taxonomy around what is GAAP for state and local governments. So on a voluntary basis, governments could choose to tag their financial statements and have that information in a very structured way. And if you're familiar with the XBRL function on the FASB side of the house, and you know what that means, but we are deep in that. And that project, for example, will never land on the standard setting side because it's meant to reflect what is GAAP rather than to drive what is GAAP. But that's a function of the stage of the organization that we're in. So here we'll switch into what I refer to as sort of basic teaching nuggets, not to be confused with chicken nuggets if it's lunchtime in where you are, but just some basic things that I know from a standard setting perspective you may be interested in. And these would apply whether you are a public administration faculty member or an accounting faculty member. And the first thing that I want to hit on here, and I'll spill over a little bit to the nonprofit side, to Jeff Gabello and Jeff Mechanic's world, and think about nonprofits as well. One of the things that I think, having been a professor, is that good pedagogy sort of starts with the idea of comparing and contrasting different things. And here, you're in this webinar today because you're thinking about the financial reporting model, either for not-for-profit organizations or governments. If you're an accounting faculty member, I know and you probably teach a lot of courses that are very much centered on corporate entities. And so if students we know learn by contrasting, it occurs to me that maybe even in the schools where you don't have a standalone governmental and nonprofit accounting course, maybe there are ways to sort of infuse some of that information about government and nonprofit financial reporting. So what I've done on the next slide is to prepare an income statement equivalent, a statement of activities for a not-for-profit organization, and then we'll look at one for governments, and then maybe as faculty members, you're kind of thinking about how you could compare and contrast the needs of users of those different types of entities. So if you gave your students the statement of activities in an intermediate accounting course, for example, and you didn't label it at the top that it was a not-for-profit organization, there are 4 things on that statement that they could probably point to identify that it was a not-for-profit organization. The first of those is at the top, we've got with and without donor restrictions, so that the resources coming into the nonprofit organization are designated in that way. The second thing that they might notice is the reclassification of amounts from restrictions. And so they would get the idea that if donors place restrictions on resources, maybe users of the financial statements would want to know about that. And they also would want to know when those restrictions have been satisfied. The third thing that they might notice is in the expenses section, we disaggregate the expenses by whether they are program related or support related, administrative or fundraising. And so somebody could look at that and say $400 of the $500 of the expenses were related to the program. There's an 80% program ratio, which is a commonly used metric in the nonprofit area. The last thing they would notice is that it ties out to the end to net assets, which would also show up on the statement of financial position, and that those two are disaggregated by with and without donor restrictions. And by showing students a nonprofit statement of activities, it would not only demonstrate that the needs of users in the nonprofit area are different, it would also help them contrast with the users of corporate financial statements. So let's take another example. On the next slide, we'll look at a government entity, and this is the government-wide statement of activities, which for those of you who are familiar with it, great. If you're not familiar with it, I have to tell you that this is actually my favorite statement, and I know that what that says about me, it puts me squarely in the geek category. But I love this statement, and I'll tell you why when you introduce it to students. So if you gave this to students and they didn't know, you didn't have a label that it was a city, wasn't labeled at the top that it was a government, they could look at some things and wonder why it was different, and then start to think about why the users of financial statements in this area would be fundamentally different. So the first thing that they would notice is on the left-hand side of the screen, the first thing that happens on this thing that kind of looks like what they've seen for an income statement is the expenses. And we don't typically start with expenses. We typically start with revenues. And those expenses are disaggregated by the function or program that they relate to, like public safety, for example. And so that would be unique. And if they started to figure out what type of entity would need to do that, maybe government would come to mind. The next thing that they would notice is that revenues follow those expenses. And so for each one of those functions or programs, the amount of revenues that can be specifically attributable to those expenses is then sort of backed out from those expenses. Then, by way of a mechanical sort of calculation, they would see on the next side of the screen that you take the difference between expenses and revenues, and that in most cases, a lot of these functions and programs like public safety and public works would have a negative number represented there. And the reason is that those expenses are more than the revenues that that particular function can generate. And so then they would next see the very last part of the statement is these general revenues that show up at the bottom that add add to this net expense to subsidize or provide for those services. And so what it illustrates is that the needs of the users of a government's financial statements are fundamentally different of those of a government entity, and even fundamentally different from those of a not-for-profit entity. So these may be ways that you can sort of weave that in to your courses if you've got a little space to do that, even without a standalone government or nonprofit accounting course. On the next slide, we've shown this before, but I want to point out that the structure of governmental financial statements for state and local governments in the U.S. follows this typical pattern. So that educational video series that I talked about earlier being created for elected officials or faculty members or anybody who just wants to understand their local government's financial statements a little bit better, this is the mapping that we use in that video series. So you may see that again if you choose to use that video, watch or use that video series in your course. And the thing that I'll point out here that is important for students to know that there are 4 sets of financial statements here. The first, the government-wide statements, an example of which we just saw, governmental funds financial statements, proprietary funds financial statements, and fiduciary fund financial statements. And 2 things to kind of highlight here for governments: the complexity around what constitutes a reporting entity means that we have to consider component units. And so as you're contemplating how to teach this content, that's usually something important to consider. The next thing that's important to consider is that the governmental funds actually use a different basis of accounting other than accrual accounting. So here we're going to see what exactly does that mean. So if your students understand fundamentally accrual-based accounting, what does modified accrual look like when they get to those governmental funds? And I love to do this by way of contrast to show on the far right, we've got accrual-based financial statements that has non-current and current things on it. And then on the left side, I asked students to kind of think about what would be there if we were a purely cash-based balance sheet. Not that we use that in governments, but just to illustrate what the range is. And there they would identify that it would be cash and basically equity if you're looking at a pure cash-based set of financial statements. So that gets them to the middle and gets them to modified accrual. And you'll find some conversation about that in the educational videos. One of the things that is not there probably as much in those videos is the concept of revenue recognition, where revenues under the modified accrual basis of accounting must be recognized when they are measurable and available. And that availability criterion is the one that gives us a little trouble. We have to wrestle with a little bit, and that's what drives at least one side of those. If you're familiar with the deferred inflows and deferred outflows of resources, those unavailable revenues sit squarely in the deferred inflows of resources. So I thought we would, now that we've got that backdrop, walk our way through the next example, which is a revenue recognition exercise that's meant to be illustrative for your students. And I think whether you are an accounting professor or you are a public administration professor, you can glean something from this that I think would be helpful for your students. So we're taking a very sanitized, distilled grants example where we have a government that is awarded $200,000 in expenditure-driven federal grants, and they don't get any cash right away. They make $200,000 of qualifying expenditures, so we can think about that like the government probably believes they're entitled to the receipt of the federal grant at that point. But we're not going to get reimbursed for those this year, and we're going to get reimbursed half of those, $100,000, into the next year that's within our quote availability period, where what we mean by that is available soon enough to meet the current period or year 1 obligations. The other half, the other $100,000, is going to be reimbursed after the availability period. So in the recognition of this, we want to look at first year 1 and think about what that would look like. If we thought about it from the cash basis, and I don't know anybody where cash is GAAP, any entities for which cash is GAAP, but if we were purely cash basis, there would be no revenue recognition. An accrual-based measure would say we'd recognize that entire $200,000 of revenue, where under the modified accrual basis of accounting, we sort of put up a stop sign and say, wait, if those resources aren't going to be available, they're going to be available later, they can't meet current period obligations, then we defer those, create a deferred inflow of resources for those unavailable revenues. And so that's the reason in year 1 under the modified accrual basis, we would only recognize $100,000 of revenue. When we get to year two, under the cash basis, we would see that we would recognize that entire 200,000. Under the accrual basis of accounting, we've recognized it all in year one. There's nothing else to recognize. And in year two, if you're an accounting professor, this is the fun place where your accounting students can do the fun journal entry of moving what was in unavailable revenue, which they can tend to conceptualize like deferred revenue in the corporate setting. They're going to move that from the unavailable revenue into revenue in that next year. If you're a public administration faculty member, I love to point out that if we looked at the total, if we added one more column out to the right, that regardless of the basis of accounting that we used, these the revenues that would be recognized over those 2 years in total would be the same, but they differ between year one and year two, depending on the basis of accounting that you use. So it's a great illustration, something you can use in the classroom, works for accounting, it works for public admin, where you're just trying to get conceptually, why does it matter when we recognize revenues? This is an illustration of that. So I think this takes us through the teaching nuggets, Jeff, where this will place us in a good spot to do the polling question 2.
That's right. Thank you, Tammy. So the second polling question, if we can launch it, which of the following best describes your current place of employment? A, U.S. private university or college, B, U.S. public university or college, C, U.S. community college, D, international education institution, or E, other/not an educator. So we'll give you a minute or so to look at that. I don't see that we have any questions right now that Tammy could answer. So at the moment, let's see. I unfortunately don't get to see the results for some reason. We're at 92%, so very, very close right now. We'll just give everybody a few more seconds, and then we could launch the results. Okay. Let's see. If you want to launch the results, thank you. So U.S. private university, 10%. So the overwhelming majority are from U.S. public universities or colleges, and then the others, and then about a quarter of you are not educators. So yeah, it's pretty heavily weighted towards U.S. public universities there. So thank you very much for participating. And now I'll turn it back over to Tammy.
Thanks, Jeff. So now that we have kind of some of those teaching nuggets in place, I want to move into talking about the standard setting topics for the classroom. And I want to point out here, we won't cover everything that's happening on a standard setting basis perspective. And I would encourage you to, if you're new to teaching this area or anything really, to not think that you can teach it all and to accept the fact that you can't teach it all. As we talk about some of these standard setting topics, some of these may spur research ideas, and so that's great too. So on the next slide, we see something that's almost kind of the reverse order of the standard setting process in general. So I tend to think about standard setting process in 3 buckets. It's either in the pre-agenda phase where we're thinking about whether, and the board's contemplating whether it's going to take something on. It's in the standard setting phase where there's an active deliberation kind of happening associated with it, or the post-agenda phase, where at that point we're evaluating whether the standard worked as intended with sort of a feedback loop. I want to start, however, with the pronouncements that are currently being implemented and focus on one in particular. And that one in particular that we'll talk about is the Statement 103, the financial reporting model. And before we talk about it in detail, I will point out that currently being implemented, Statements 100, 101, 102, 103, 104, we're up to 104 statements. Those projects deal with, in order, accounting errors and corrections, compensated absences, certain risk disclosures, the financial reporting model, which we see here, and then certain capital assets in Statement 104. And I haven't provided any slides or any background on those other 4 statements that are in the process of being implemented, just because the scope of this project was so massive. And I wanted us to have enough time to really think about it, particularly having talked about what the structure of the financial statements looks like for a government entity. So I will point out here that probably the most important thing about the implementation or the issuance of the financial reporting model standard, Statement 103, is that following around 20 years after having GASB Statement 34, which had been in place all of that time, this was a relook at the reporting model. And most significant is what you don't see here, which is that the board opted to not do anything with the governmental funds. And that would have been the area that would have had a significant overhaul of the financial statements. And so if you're teaching in this area, concerned about it, know that those governmental funds didn't get adjusted in the way that perhaps we might have expected them to. So what did happen in the financial reporting model was that we made some targeted improvements to the reporting model. One of those related, as I said, nothing to the governmental funds, but the proprietary funds have a new subtotal for operating income and loss and non-capital subsidies. That may be information that is there that you can use from a teaching or even from a research perspective, information that you may want to extract. One of the most significant things that happened with 103 was an intentional effort to make sure that the MD&A did not include boilerplate language, encouraging governments to not include boilerplate language, and to make sure the analysis that was included in the MD&A was substantive. I'll point out here as well that the MD&A now it's very prescriptive. There are 5 sections associated with the MD&A. Those include the overview, a financial summary, a detailed analysis, a look at capital assets and financing activities, and other known facts and conditions that may be relevant. If you are potentially a public administration faculty member and thinking about how do you weave in if you've got a financial management and budgeting class and you can't do a whole lot with financial reporting, but you can do a little bit, the MD&A is a great place to go for students to dig in and read some of that content and use it in their classwork. I want to give a shout out here too. We'll do this in places as well. We give out a research grant every year. We gave out one in 2024 to Mihail Ivanchik, who then completed a 1-year grant study on MD&A, how much the MD&A changed year over year using a cosine similarity test. And he presented that work. We were thrilled to have him here in June to present those findings to the board and to the staff. On the next slide, we see the other edits that were made to the financial reporting model. The first of those is the budgetary comparison schedules, and those previously could be presented as required supplementary information, but sometimes governments would move those up to the basic financial statements, and that is no longer an option. The other thing that is new there is, although governments have had to, since GASB 34, have had to present their actual and budget information, they didn't have to present the variances. So you could calculate those if you were a user of the financial statements, but the variance didn't show up there and unless a government chose to show them. And so now those are required. The variances that are required to be presented are those that are the difference between actual and the original budget and actual and the final budget. And if you are a public administration faculty member, that may be a great place for you to connect the budgeting material in your courses to how that shows up in the financial reports, because ultimately that information and those variances allow users of the financial statements to determine whether the government lived up to what it said it was going to do, how close it came to the projections that it made. There are a couple of other provisions related to major component units having to be separately presented if that's feasible, and the presentation of the unusual and infrequent items. Those are closer. When we looked at the statement of activities earlier, those are required to be presented closer to the bottom of that statement. So that's what we have for the pronouncements that are currently being implemented. Another fun place for us to kind of think about is projects currently being deliberated by the board. If you're thinking about this from a teaching perspective, sometimes you can look at projects that are being deliberated by the board and have students go out and look at comment letters, have them watch part of a board meeting, catch a particular part of that, and have them engage in an activity related to that. So there's a lot here that you can do with that. So on the next slide, I've identified the projects that the board is looking at, and they're not all here. I've highlighted 3. I want to point out one other that's not on this list, and it is the one for subsequent events. We're getting close to wrapping up that project and expect that to go final pretty soon. And I wanted to specifically mention it because the improvements that were made in the guidance related to subsequent events, they were helped along by Ann Thompson, who's on the faculty at the University of Illinois. She and some co-authors worked on a paper that helped identify that there were issues with how preparers were interpreting and auditors were interpreting what should go in the subsequent event disclosures. These projects that are listed here are ones that are expected to be ongoing for a little bit longer and have been going on for quite some time. And the first of those is the Revenue and Expense Recognition Project. And this is a place where if you're thinking about something that your students can do, one of the fundamental exercises is for governments to have to figure out whether their transactions fall into kind of more of an exchange type of nature or a non-exchange nature. And this project has worked on how that sort of categorization should happen. The other thing I think is really fun in this project is that the project team has talked very specifically about what they call, and I love it as a former educator, they call it the anchoring element. So when you think about recording a potential revenue transaction, like in the case of the grants example that we talked about earlier, they always talk about one side, either the debit or credit, being kind of the anchoring element. And so if you've got something that is potentially a revenue, the anchoring element is the receivable. So at the point you book the receivable, you determine whether the credit side of that journal entry is going to be revenue or if it's going to be unavailable revenue and treated as a deferred inflow of resources. And so there are some things practically speaking about that project, although it is massive, that you could use if you chose to in your classrooms. The next one I wanted to talk a little bit about is the Going Concern Uncertainties and Severe Financial Stress Project. And a number of you have participated when we have done outreach surveys on some of these disclosures. You've contributed in that way. Some of you have participated in interviews as we were talking to people about what they wanted to know. This project will be one that is solely focused on disclosures, and the challenge that it has run into, and the thing that I think could make it fun from a teaching perspective, is that the going concern concept that exists in the accounting and the auditing literature is typically viewed from the perspective of a corporate entity. And when we think about government entities, it's not often that they go out of business. They have a propensity for longevity. And so you can have a government that is poorly performing for some period of time, and still they will continue to exist. And so this project has distilled the elements of disclosures, the categories for which we will explore disclosures, into two buckets. And the first of those is a probable dissolution bucket. So is it likely that the government is not going to be around, whether that's related to something in their financial environment or if they might be subsumed by another government entity, for example. So that probable dissolution bucket is one where we're thinking about specific disclosures for that. The other is this idea of severe financial stress and what disclosures would users of financial statements want in order to evaluate severe financial stress sort of conditions. And so there may be opportunities for this project for you to be involved in it as well. There may be some future opportunities as it is underway. And then the last one that I wanted to talk about here is infrastructure assets. And so this is an area students can kind of understand it. They get it. One of the things that's important for them to know is that those assets get capitalized just like other capital assets, and that governments have the ability to elect something referred to as a modified approach. And under that modified approach, those infrastructure assets would not be depreciated, because the assumption is if they're meeting those criteria, then the assets aren't suffering economic depreciation. Now, that's all been in place since GASB Statement 34 that was issued back in 1999. But this look at infrastructure assets is whether there might be additional information that would be available or could be available to users of financial statements to help them assess infrastructure assets, because a lot of people care very much about whether the infrastructure is in good shape. You might suspect that this is really challenging, so I want to introduce the tension here in it. And the tension here is that users of financial statements probably want to know whether they're going to need to be significant investments in infrastructure assets. And preparers, in order to provide that information, that's going to be hard information for them to prepare. So there's an inherent tension between the preparers and the users in this case. The board recently deliberated on infrastructure assets sets, and you could go back and listen to the October board meeting. We're expecting an exposure draft probably by the end of Q1 of 2026. But in it, you might expect to see that our board members, there will be some alternate views that are put forward because of that tension of what can we provide that is useful, and others being concerned about the cost that that would impose on preparers. So that project will go to an exposure draft and be available for comment if you're interested in commenting on it in probably the Q2 of 2026. And I'll back up and say that the going concern project is expected to issue an exposure draft a little bit later than that, by the end of the Q2, so that in the Q3 of 2026, there would be an opportunity to participate by writing a comment letter. And we always welcome the contributions that our academic colleagues make, because typically your group doesn't really have a side that they're taking, and you are exceedingly thoughtful and conceptual in your thinking. So we would welcome that. In addition to those projects, we have research activities that are ongoing at the GASB, and some of these may be things that the things I'm going to talk about are formal things that we're doing, and certainly we do, everything I think we do is research related, some things on more of an ad hoc basis. So some of these may be things that you think are interesting for you from a teaching perspective, some of them may be interesting from a research perspective. So the first one that I want to point out is our cybersecurity risk disclosures. Those are, we're looking at that now. There will be a paper that staff is working on that will finish up in February, I believe, and it will result in a research memorandum about whether the staff believes that there's any path by which we could require disclosures related to cybersecurity risks. I will point out, related to the research memoranda, that those live out on the website on the gasb.org/academics page. So any of those that you want to go look at, please go look at them. One of the things I think you should take great pride in is when you do work that we then cite, because we can't do all the research ourselves and we lean very heavily on the work that you do, we will cite you in our reports, and it's a great place for you to go, I was cited in this report, and use that in your promotion and tenure decisions and your annual evaluation. I'll point out here, we're going to talk in a little bit more depth about gap structure in just a minute, and a little bit more about the pension and OPEB disclosures, and the revenue and expense recognition I mentioned earlier. That separate bigger project relates to recognition, and then there is a question and some research that is happening related to whether there need to be some changes in the note disclosures. So let's move to the next slide and talk specifically about our gap structure project. So as I mentioned before, this is the idea that we're thinking about how do we communicate what is gap to our stakeholders. And if you're operating primarily on the FASB side of the world, you think about the codification being the sole source, and it is more of a single authority structure. On our side of the house, it's a dual authority, meaning that our original pronouncements, those statements that we've talked about, have equal weight to the codification. And so the fundamental question that we're trying to address in this project is, would a single authority approach be preferable? And we are looking at it both from the standpoint of the stakeholders, so that they're not looking into different places for information, number one, and also the cost of maintaining that dual authority structure is pretty significant. So if you're somebody who uses GARS and you've got thoughts about that, or access system that gets you into the original pronouncements and codification, and you have thoughts about this dual authority structure, we would welcome those. As I mentioned earlier, the consultative group for this project for gap structure has been talking about this. They spent a couple of months over the summer and into the fall meeting, and one of the things that is top of mind, and we'll talk about this in a little bit, is whether we need to be thinking specifically about new staff. So we understand the resource constraints, and it's been kind of encouraging that some of the people we talked to who've used our current structure for a very long time are open to changes, because they want it to be the best that it can be, kind of for the next generation of governmental accountants. So the next thing that we'll talk about is another research activity that we've got going on. But first, before we move into it, I want to point out here that I put all 7 of our concept statements on the slide here for you, or rather Christian, our fantastic postgraduate technical assistant, did this, put them all on the slide. And one of the things I asked him before this presentation was, what do you think the significance is, of these 7 concept statements? And he said, I guess by concept statement, 6, that means that's when color was introduced. We just weren't very flashy with them before. So there's a shout out to Christian on that. If I'm thinking about this from a teaching perspective before we move on, one of the things that I think is really helpful is concept statement 1 deals with governmental accounting and just the objectives of it in general for financial reporting. And so it's a great place for students to kind of dig into. Now, let's move into 2 of those concept statements and talk about them. And we're thinking about them very closely as of late. They are concept statement 3 and concept statement 7. Concept statement 3 deals with our communication methods. Should something appear on the face of the financial statements, in the notes, or in the required supplementary information? It had a concept associated with disclosures, that is, things that go in the notes to the financial statements. It had a concept of essentiality that was put forward that in 2022, the board issued concept statement number 7, related specifically to disclosure or what happens in the notes to the financial statements. And it put some terminology around essentiality that said that to be essential, a piece of information, a unit of information needed to be have a meaningful effect on the decisions that are made or the assessments of accountability made by users of financial statements, and that needed to be true for a breadth or a depth of users. So that takes us to one of the projects that was on a slide a couple of slides ago, and that is we have a current research project that is evaluating pension and OPEB disclosures to allow the board to assess whether they believe that all of our existing disclosures, keeping in mind concept statements generally sort of project forward, looking back at our existing disclosure requirements for whether we think that those disclosure requirements, everything that's required, is essential. And in that process, it's involved, we start with the easy things, right? Pension and OPEB disclosures. That's meant to be a joke that in a room I would hopefully see you laughing. We started with the most challenging one with pension and OPEB disclosures, and we're looking specifically at all of the disclosures that are there for both pensions and OPEBs, whether it is pension or OPEBs, whether it's the plan or the government employer, whether it's a trusted or a non-trusted plan, whether it's defined benefit or defined contribution. And so part of that has meant, how do we synthesize those disclosures? Because then we have to go out to the user community to ask them how they're using, what information they're using, and how they're using it to do that essentiality evaluation. So what I will say here is that although we're focused very much on essentiality, I would welcome academic research related to disclosures, whether that's the volume of disclosures, how efficiently disclosures are presented, and also the salience of particular disclosures, in addition to what we're doing here, because it would be a nice complement to the work that we're doing. The next slide is the monitoring slide, and I know that just from a time perspective, I'm going to just hit 2 of these very quickly. We have monitoring effort that addresses things that are kind of going on in our environment that haven't moved into a formal research activity, not a formal standard setting project. And the 2 I'll point out here is we don't want to let that gap utilization work that we completed earlier this year, we don't want to let that wither away. And so we will continue to monitor state requirements and refresh our regression models as we go along. And we have recently added a use of technology in government's project there that will evaluate what technology governments are using. So I think that takes us to, Jeff, the next slide, which is polling question 3.
Yes, thank you, Tammy. So polling question 3 asks, do you teach GASB standards or FASB standards in your courses? So there's multiple choice here. So it's a one answer only, sorry. A, GASB standards only. B, FASB standards only. C, both GASB and FASB standards in different classes. D, both GASB and FASB standards in the same class. Or E, neither, not an educator. So I didn't see any questions in the Q&A that we could answer right now. Actually, Tammy, there was one about whether Q1 is calendar or fiscal Q1. I don't know if you could.
Gotcha. That would be calendar Q1. Thank you for that
Okay.
clarification. Yep.
All right. Oh, good. So we're able to get that one out, but there are no other open questions at the moment. So we're about 94% right now. Maybe give them everybody another few seconds, and then we could launch the answers, launch the responses. I mean, all right, let's see how we're doing. So, okay, so this one was neither not an educator. So that could mean that you don't teach GASB or FASB standards at all. But I think a good number of you do. I mean, the remaining 40% do teach FASB standards or not-for-profit FASB standards in your classes. So, so thank you for that. Thank you for the feedback. And now we'll go back to Tammy for the next, her final section.
Great. Thanks, Jeff. So I only have one thing that I want to hit here. And Christian, if we could advance to slide the OPEB PIR timeline slide to that one. I mentioned that we do post-employment, or post-implementation review. Post-employment, I'm thinking of those benefits still. Post-implementation review of our major standards, and we've got one of those projects underway now related to other post-employment benefits. So things like healthcare benefits that are provided in retirement for government employees. And I want to point out here that this is a place where we do often rely very significantly on academic research. So this timeline depicts what we've got going on related to that OPEB PIR effort. Any type of methodology you can describe, I think we've done it. And we've completed all of that analysis, and we'll present one more update to the board in December and then issue our final report by the end of 2026, and that is calendar 2026. I want to point out here as an example that we have Se-Young Yoon at Framingham State University who agreed to do a project related to OPEBs that has informed our efforts in this way. So PIR, if you're an academic, is a great way to get your research noted in a place that is very important to us. So the last two slides that I have here related to GASB, one is what we're thinking about, and I'll just say in short, we're probably thinking about the same things you're thinking about and the resource constraints. And I think you'll hear Joel Black when our board chair, when he talks about the environment, there's a high threshold for us taking on a project because we understand the resource constraints in governments. I'll also point out that if you want to look at our technical plan, you can go out and look at that at any point, and it's got a lot more detail than what I provided to you earlier. You can also, if you've got a research paper that is focused in some way on governmental accounting, you can submit it. We've got a link out on our website, or you could submit it to me via email, and I'm glad to take a look at it. I have Ryan McDonough, give a shout out to him too. He's our academic fellow at Rutgers University, who does a lot of great work for us, contributes to the mission, and he helps me manage that process. So we would welcome that research. So the last slide here, I have this information that is available for you for anything that you might think of that you would be interested in engaging with us. So if you heard about something today, whether it's participating in a task force, consultative group, the advisory council, making sure you're on a distribution list for the surveys that we give out. We work to keep those very short and are mindful of your time. So any of those things that we can sort of help you with, we want you all to be engaged with us in this effort. As I said, we get by with a little help from our friends. So the academic webpage, gasb.org/academics, has all of these things out here. And the four that I'll mention before I hand it back to Jeff to talk about not-for-profit accounting and financial reporting is I want to point out that our research grant award, it is the Gil Crane Memorial Research Grant Award. You can find it on the website. We open up that grant award period it'll open up again in March of 2026. Applications would be due by the end of May 2026. We would make a decision in the next month. Typically, the grant awardee gets a 1-year period in which to complete their study. And then we will have them engage with the relevant project team that their project relates to. So I would point out that is out there. Another thing that I wanted to mention here is that the educational videos that I mentioned at the outset will be out on the website when those are finished. And then last but not least, if I can count, maybe I can't because it's the Bridging the Gap podcast. I wanted to point that out too, that you can use it. And then just as a final reminder that the PTA program nomination deadline is November the 30th. And so that is true for both the FASB and the GASB, and we would welcome the nominations of your high achieving students. We love to bring them here. So I think that takes me to the end. Jeff, I'll hand it back to you and Jeff Mechanic for the not-for-profit portion of the presentation.
Thank you very much, Tammy. So if we could launch polling question number 4. If you research governmental accounting topics, which of the following identifies the source of data you use? A, hand-collected data, B, U.S. Census Bureau data, C, other proprietary data, D, all of the above, or E, none of the above. I don't conduct governmental accounting research. So we'll give everybody a few seconds for that. I wasn't sure if there were any questions. I haven't to check the. I don't know if you could answer this one, Tammy. It asks if there is a repository of U.S. state and local governments' financial statements similar to the Edgar repository for public companies by the SEC. What does GASB use to understand current practice?
I'm seeing that question too. Stephen, that
Yeah.
is a fantastic question. The challenge in researching in the governmental area is data. The U.S. Census Bureau does have some data that you can download. It's available out there. You also, if you're interested at all in governments that are subject to the single audit, the Federal Audit Clearinghouse has data that are available. And then the last thing that I'll mention related to data that might be helpful is at the University of Chicago, the Harris School of Public Policy formed a partnership with Investor Tools and has a database that is available. I think it's available for purchase. I think you have to purchase by type of entity, county, municipality, that sort of thing, and by year. So that data is out there. So there is much of the research in this area, unfortunately, that is still very much a hand-collected effort, but there are some limited sources available.
Great. Well, thank you for that, Tammy. Let's launch the answers, please. Okay, so we have a lot of so the 59% who don't conduct governmental research, but those who do use all of the above. So I think that's probably very helpful to know for the GASB team. Appreciate it. So I'm going to move on to introducing the FASB section. Next slide. So we're gonna do a very similar type of structure, talk about general news, then teaching topics. So Jeff will talk about the general news, I will talk about teaching topics, and then Jeff will finish up with timely research issues. And we will get to answer questions as we get them. So let's move on to the next slide. So just want to just make you aware of the FASB website if you don't use it. Just picked a few things here. It's www.fasb.org, and then at the bottom of the homepage, there are some resources tabs, and I thought a couple here that are interesting for academics are the not-for-profits page. If you research FASB not-for-profit issues, and the academics portal. So for the not-for-profits page, there's a lot of information about our not-for-profit team and a lot of information about our not-for-profit advisory committee, which is a standing committee of the FASB that meets twice a year, has approximately 15 to 20 members that are drawn from practice, preparers, and also investors, meaning lenders. So it's and an academic as well to bring attention to the FASB and the FASB staff and board about various not-for-profit issues. There's a lot of good information in there. And then the academics is on the next slide. So this is a sort of a one-stop shop for all the academic resources of the FASB. You could submit a paper. So the blue box on the right-hand side of this, you can, if you wanted to submit a research paper to the FASB to be reviewed by the academic staff here, you can do that. There's also information about our postdoctoral fellowship program, which is a one-year fellowship for FASB for those who have just completed a PhD in accounting and will be moving on to teaching and can do a one-year fellowship here. There's also information about the Emerging Scholar Award, and then other information that's very helpful and useful is the information about the Emerging Financial Reporting Issues Research Symposium. That is a symposium that has been held, will have been held 3 times in 2026. So it's been held 2024, 2025, and then will be held in 2026 here in Norwalk, Connecticut, in conjunction with the University of Chicago Business School, to discuss papers and other information about various issues. So in 2024, the topic was intangibles. In 2025, it was cash flow information. And being on the cash flows team, we found that to be very helpful and very useful in our current analysis right now. And then the 2026 topic is a broader topic, and it's standard, recently issued standards in general, such as the recent standard on that was issued a couple of years ago on supply trade financing disclosures, or on long-term insurance contracts, or on CECL, current expected credit losses. So that will be held on April 3rd, 2026 here in Norwalk. Unfortunately, the deadline to submit papers is tomorrow. So, yeah, that will be I think the third in that series, and I'm not sure if it's the final, but I think it might actually be the final of those 3. So let's move on to the next slide. So another thing we wanted to point out to you was the archived webinar from September 5th. So this is a FASB webinar for academics, and it is geared towards all FASB, whereas this is geared towards nonprofits. This seminar is meant to be incremental to that September 5th webinar, but that webinar covers other FASB projects and standard setting activities across all of our 3 sectors that we serve: private companies, public companies, and nonprofits. You can listen to that. It's archived on our website. However, you don't get CPE credit for listening to the archived webinar. So now I'm going to move on to the next polling question number 5. So have you previously visited the GASB or FASB academic webpage or portals? A, GASB only, B, FASB only, C, both GASB and FASB, or D, neither, not an educator. So I don't know. There's no open questions at the moment. So we'll just see what we come up with here. Jeff, do you have something?
No.
No, okay. All right. Well, we'll see what comes up here for the responses. We're at 87%, so we could release the answers in another 30 seconds or so. All right, if you're ready, we could launch the answer. So, most of you have looked at either one or both of our websites, so that's really great. They are really, I do have to say, that they really are a great resource of information and about everything related to both of our organizations. So now I'm going to turn it over to Jeff Mechanic to talk about the general news.
Thanks, Jeff, and it's great to be here with all of you today. Let's move on to the next slide. So this is a picture or pictures of our 7 board members, 4 of whom need to vote for a standard in order to, at least 4 need to vote for a standard in order to make a change within GAAP. You'll see that there is a mixture of backgrounds. 3 come from public accounting, 1 comes from academia, 1 comes from industry, and 2 come from financial, our financial statement users. I think it's important to point out here that the GASB focuses exclusively on state and local governments, whereas the FASB, not-for-profits, are just one of the sectors that we serve, along with public and private business entities. So therefore, our board members tend to be generalists, or at least not experts in the not-for-profit area, although some of them have certainly have some experience as auditors or serving on boards and the like. And since they are largely generalists, they're very reliant on staff and our not-for-profit advisory committee to help them know what they need to know in order to vote on standards, especially affecting not-for-profit organizations. So that's one difference, from the GASB. Just to note a couple of upcoming rotations off the board. Christine Bodison, who is our academic, is her term ends next June 30th, and I believe that they will be announcing her successor very shortly. And we have two board members who are rotating off in the June 30th, 2027. That is our chair, Rich Jones, and our prepare board member, Marcia Hunt. So anyway, let's move on to the next slide. So this is a high-level snapshot of the various components of the FASB's current agenda. And three of these four components are very similar to what you heard Tammy go over when she was talking about the GASB's agenda. There is the technical agenda, which are the projects that are under active consideration for changes to GAAP. We still actually have 10 of them. This is a snapshot as of October 31st. We still have 10, but as you'll hear in a minute, it's not the exact same 10 as they were as of October 31st. We completed one project, and then the board the other day added another project. So one off and one on, still 10 as of now. The second of those components is our research agenda. That's our pipeline of possible projects into the active technical agenda. And that's where we're trying to gather more information as staff to help the board with their agenda decision. In particular, have they met the three criteria that we use to determine whether or not a project belongs on the active technical agenda? Very quickly, those are, is it a pervasive issue? Are there one or more technically feasible solutions that could be implemented cost effectively? And can the scope of the issue be adequately defined? If 4 of the 7 board members agree that all 3 of those criteria have been met, then they will move a project onto the active technical agenda. If not, they won't. So some of these research projects may never make it, or aspects of it may never make it onto the active technical agenda. And then the third similar component to the GASB is our post-implementation review, the opposite end of the spectrum, so to speak. These are where standards have already been issued, and we are trying to determine are they functioning as intended. And we right now have 2 of those projects on leases, which is about to wrap up, and on credit losses. As of a year ago, we had a 3rd project on revenue recognition and contracts with customers, wrapped that up and issued a final report, which I'll highlight in a little bit. We wrapped that up last November. The one area that differs a little bit from the GASB is that we also have an emerging issues task force whose work constitutes another pipeline into the possible projects into the active technical agenda. These specifically are narrow interpretive projects where we wouldn't be breaking major new ground in GAAP, and especially areas where there is diversity in practice. There are currently 2 of these on the agenda, the first of which has marginal applicability, at least some not-for-profits, and that is application of Topic 715, retirement accounting, to market return cash balance plans. And then there's a second one that really has little or no applicability to not-for-profits, and that is on mortgage servicing rights. Let's move on to the next slide. This is a little bit of a drill down into the active technical agenda. This is, again, a snapshot as of October 31st. The 2 changes are the project that is labeled, that says credit losses, financial instruments, credit losses, purchased financial assets. That's right in the middle of this table. Was actually issued as ASU 2025-08. The title actually is slightly different. It is credit losses, purchased loans. So they specifically narrowed it down just a little bit in the title and the final standard. That's not likely to affect many, if any, not-for-profit organizations, unlike banks and credit unions, even community development financial institutions. I'm not aware that many, if any of them, are actually purchasing loans and then holding them. The one that was added to the agenda, just added the other day, has to do with streamlining of certain aspects of the equity method of accounting, particularly with investees that have complex allocation structures. Again, I wouldn't expect this to affect many, if any, not-for-profits, even healthcare not-for-profits that do use equity method accounting with some of their investees. But we'll see. Again, the project is not yet very far along. Now, with regard to a couple other things to point out here, you'll see on the middle column, next milestone, that most of these projects are winding their way very soon to final ASUs, final accounting standards updates, many of them in the 4th quarter of this year, one of them in the 1st quarter of next year. And hence, as these wind down, we engaged over the past year or so in our latest agenda consultation, which I'll have a little bit more to say about shortly. Regarding which might affect not-for-profit organizations, well, one of them, Jeff Gabello, is going to have some slides on in the teaching topics area, and that is on accounting for environmental credit programs. A few others that could affect at least some not-for-profits, accounting for debt exchanges. This has to do with the repayment of debt by taking out more debt, new debt, with the same multiple lenders or multiple creditors. This could affect some larger not-for-profits, ones that have syndicated loans or otherwise have multiple lenders. And what this will provide is an expedient that, under certain conditions, you can account for these as extinguishments without having to go through the cash flow test and other thinking that you would have to do normally to distinguish between extinguishment accounting and modification accounting. So again, it'll provide an expedient, maybe for some larger not-for-profits among other entities. The second one that could affect some not-for-profits is one that was just recently added, that is on classification of certain digital assets as cash equivalents, particularly what are known as stable coins, digital assets that are tied to underlying functional currency, such as US dollar or euros or whatever. I'm not aware right now that there are a lot of not-for-profits are holding or transacting in these, but that's not to say that this couldn't evolve over the coming years. So they could have some applicability to not-for-profits, at least in the future. The one that's called codification improvements, evergreen. Well, periodically we make minor technical amendments and so forth to our codification, not intended to have significant changes to GAAP. Only reason I really mention this is that of the 33 issues that will be coming out in this latest codification improvements ASU in the coming months, fully 10 of those affect either healthcare or other not-for-profit organizations. A fourth one that could affect some not-for-profit organizations is on interim reporting, narrow scope improvements. There we're trying to bring some more clarity, more consistency to when disclosures are not just required in annual financial statements, but also in interim financial statements, such as quarterly financial statements. But the big caveat there is that, as far as we're aware, not that many not-for-profit organizations are doing full GAAP quarterly financial statements with notes and all, as opposed to giving a balance sheet to a lender once a quarter or giving an activity statement to a potential grantor or something like that. Really, what we're hearing about is primarily some healthcare not-for-profits that are doing it for bond indenture purposes. So again, those are some that could affect not-for-profit organizations. I would say none of them in an earth-shattering way. Let's move on to the next slide. And that is our research agenda, our pipeline. Here, one of them on accounting for derivatives, the one on digital assets, we recently moved that stablecoin issue onto the technical agenda. What really remains there is on crypto lending, which I wouldn't expect many, if any, not-for-profit organizations to be doing. Similarly, with accounting for commodities, I'm not aware that many not-for-profits are doing commodities trading or anything like that. So those couple at this stage probably wouldn't affect many, if any, not-for-profit organizations. Other ones that are pretty or sort of that wouldn't have applicability because they explicitly scope out not-for-profits are the ones on consolidation for business entities and on the one for financial key performance indicators for business entities. Others are kind of early in their research, and we don't yet know. The one besides the agenda consultation, which I'll have a slide in a moment, that's worth monitoring at this stage for not-for-profits, is the one on accounting for intangible assets, accounting for and disclosure of intangibles. So stay tuned on that. Right now, the board is primarily has directed the staff to be primarily focusing on research and development, including disclosures of R&D. Again, we'll see how that evolves, and we'll see to what extent not-for-profits are affected. Let's move on to the next slide. As Tammy said, we also have, as Tammy indicated for the GASB, we also have a post-implementation review process for the FASB. 3 stages to it. We're first monitoring implementation as it's happening to see if there's any additional educational or standard-setting activities that need to be done. Secondly, we are then in stage 2, asking how to go, where the costs and benefits, approximately what were anticipated. And then we also consider in stage 3 academic research and pull it all together, go over our findings with our trustees, and then issue a report publicly. about whether or not the standard achieved its objectives and what can we learn in the standard setting process as a result. We have, as I say, two of them right now ongoing, leases and credit losses. We recently, last year, wrapped up the one on revenue recognition. Speaking of which, moving on to the next slide. So if you're interested in about 30 pages of bedtime reading, we have our report from last November on our post-implementation review of revenue recognition in contracts with customers, our topic 606. You'll see that the overall conclusions were that the standard accomplished its stated purpose, which is better, more consistent accounting for economically similar transactions across different industries. And since this was converged with IFRS internationally as well as providing some better disclosures about this top line and often largest single line item especially business entities' financial statements. Now, that's not to say that there aren't areas of judgment that are challenging, including ones that continue to be so. Areas such as licensing of intellectual property, variable consideration, distinguishing principal versus agent. And indeed, we issued some follow-up ASUs on some of these more challenging areas in past years. And of course, new types of arrangements continue to evolve, but now we do have at least a comprehensive framework with disclosures that, again, is internationally converged with IFRS. Again, available on our website. Our second project, moving on to the next slide, is on leases. As you can see, we're in the final stages of this. We've considered all sorts of information, including academic research. We are about to go over a final report with our trustees and then expect to issue that report publicly on our website very shortly thereafter. Let's move on to the next slide. The third of those on credit losses, we're not nearly as far along. In fact, for not-for-profit organizations, they were just implementing this about a year ago. So we are now moving from at least for not-for-profits and private companies, from the second stage of how is implementation going to the first stage to the second stage of how did it go. And so we'll probably be wrapping this one up within a year or two, but we're not quite as far along as the others. Next slide. I always sort of like to remind folks about what is within this new credit losses standard, the current expected credit losses model, or CECL. Many people think of it as being all about loans. Yes, it is about loans and credit losses having to do with loans, and there are loans in the not-for-profit sector. Think about student loans, receivable. Think about programmatic loans from private foundations to operating charities. So there are those. There are also financial guarantees that grant-making organizations issue to banks and all on behalf of not-for-profits, other not-for-profits, to help them get loans from those financial institutions. So there is credit exposure there. And one that also it's important to remember, and we also have an ASU that will make it easier going forward to apply this to these types of receivables. And Jeff will be going over ASU 2505 shortly, and that is trade receivables and contract assets. So think about in the not-for-profit world, student receivables, patient receivables of a healthcare system, membership dues receivable, and other things having to do with earned income. And of course, what's not in the standard are areas where we're dealing with contributed income, areas where we're not extending credit. So you think about pledges or contributions receivable and grants receivable. Move on to the next slide. As I say, as we wind down the current technical agenda, including a lot of stuff that was heavily influenced and put onto the agenda as a result of our last agenda consultation a few years back. The board recently did another agenda consultation, issued an invitation to comment to get public reaction on possible topics back in January of this year. Comment period ended at the end of June, and the board and the staff and the board have been considering the responses that were received and starting to make changes to the research and technical agendas. And there'll be a lot more of this consideration over the coming 6 months or more. Let's move on to the next slide. We've met a few times with our not-for-profit advisory committee as they were preparing to issue this invitation to comment while the invitation to comment was out for comment. And once the comment deadline passed, and to get some reactions from our not-for-profit advisory committee about what we heard. This slide here has some of the stuff that some of the issues that the NAC or not-for-profit advisory committee discussed while the invitation to comment was out for comment. And this is, summarize, the kinds of responses that we heard in some of these areas. I will admit that these areas are um, general areas that apply also to business entities. So some of these things sort of shoehorn a little bit what was discussed in March by the NAC. But enhanced disclosures, okay, yeah, the NAC did talk about that. Statement of cash flows, can they make some improvements? That area. The NAC did talk a bit about operating measures. That's included within the financial KPIs line there in that bar graph. And then interaction of consolidation guidance has to do what we were hearing from our NAC about navigability of issues with our consolidation and merger and acquisition type guidance for not-for-profits. Also, the NAC discussed back in March definitions of public business entities and the place of not-for-profits within those. Let's move on to my last slide in this section, which is the NAC also talked about, heard that kind of feedback, and also talked a little further at their October meeting. And these are the areas that NAC members thought would be perhaps most ripe for the board to look at. None of these are urgent issues. NAC members, especially users like lenders and grantors and so forth, talked about maybe enhancing some of the disclosures, while people in industry were talking about maybe paring back on some of the disclosures that may have outlived their usefulness. Talked about perhaps looking at the definition of cash equivalents and distinguishing cash equivalents from certain types of short-term investments. Indeed, also brought up again the issue of navigability of the not-for-profit consolidation and M&A guidance. Um, Perhaps doing some more work on something that was looked at years ago, but the board didn't finish its work in that area, and that is doing something perhaps to standardize operating measures. The NAC in this particular case thought that maybe instead of trying to come up with a broad principle, which is what we tried about a decade ago, maybe instead of just specifying what types of line items should be inside or outside of such a measure. As I said, again, relooking at definition of public business entity in the place of public entity and the place of not-for-profits there, and looking at the ARO guidance and some of the difficulties in measuring. So I'm going to come back to some of these when I talk about timely research topics later on, but let me turn it back to Jeff Gabello for our next polling question.
Thank you, Jeff. Polling question number 6. Did you view the FASB update for accounting academics on September 5th, 2025? A, yes, I viewed it live. B, yes, I viewed an archived version. C, no, but I plan to. Or D, no. I don't see any open questions. Open questions for us at the moment. I also wanted to note that there is going to be another webcast on Monday the 17th, November 17th, for that the focus is on private companies and nonprofits more generally, and that's on Monday, November 17th, with a number of speakers, including Joyce Joseph, one of our board members, and Jerry Shaver, the chair of the PCC. So also recommend that. You could sign up for that on our website as well. We're up to about 93%. So I'll give you a few more seconds to answer that, and then I will jump into my section. So yeah, why don't we just launch the answers? A lot of you haven't, but if you plan to, I highly recommend it, and also to consider the webcast that's coming up on Monday. So let's move on to the next section, which is teaching topics. So next slide. The ASU's issued since last year's webinar. As Jeff Mechanic mentioned, this is always a little bit of a moving target. We just kind of have to draw a line in the sand and say, okay, as of October 31st, this is what we had. But then on Wednesday, the board issued update 2025-08 on purchase financial loans, which we don't believe would have a broad applicability to the not-for-profit sector. But as you will see, and you saw from the project list that Jeff showed in one of his slides, we do expect that the number of ASUs to be issued by the end of this year is going to greatly increase, because as we complete the projects that were introduced mainly through the 2021 agenda consultation, and for the ASUs that are listed here, we're definitely going to go through a few of them: ASU 2025-05, 6, and 7, and then a couple of projects. The one project on environmental credit programs, which the board has voted on to issue an ASU, but the ASU is still in drafting. So let's go on to the next slide. So ASU 2505. So this is something where that came up through the Private Company Council. And the Private Company Council has its own agenda as well. But everything goes ultimately has to be approved as a project by the board, by the 7-member FASB board. But sometimes those projects that the Private Company Council is addressing do have broader applicability, and this is a good example of that. So this ASU is applicable to all entities for the practical expedient, and then private companies and nonprofits for the accounting policy election. So the issue is that there was some feedback from stakeholders that for short-term receivables of 1 year or less, and contract assets. I'm just going to leave contract assets out of the discussion because I'm just assuming that nonprofits generally don't have them. But this is for short-term receivables. You are required, or all entities, public, private, nonprofit, are required to calculate a credit loss allowance in accordance with the CECL guidance. And so the feedback was that because of the long lag time between the balance sheet date and maybe when the financial statements are issued or available to be issued, very often that could be many months, and companies, essentially nonprofits and private companies mainly, basically know what they've received. So they have to go through, and there was the feedback that they do have to go through the complex calculations potentially for calculating CECL allowance. Not always complex, but they do have to go through the guidance and calculate the CECL allowance. But the feedback was, well, we've already received these. So the board decided to provide a practical expedient and an accounting policy election to help provide some relief here. So the practical expedient is open to all entities. And that practical expedient is that in developing reasonable and supportable forecasts for current receivables and contract assets, the entity could assume that current conditions as of the balance sheet date do not change. There are some exceptions to that, but we won't have time to get into those. But essentially, you would just assume you would kind of freeze those current assumptions and current conditions as of the balance sheet date. And then private companies and nonprofits, if they have elected the practical expedient, so the practical expedient has to be elected first, then you could make an accounting policy election to consider collection activity after the balance sheet date. And so this hopefully will address those concerns of having to calculate a credit loss allowance when essentially you already know what you've received and what you expect not to receive. So on the next slide, the scope, as I just mentioned, is all entities for the practical expedient, and if elected, private companies and nonprofits could make the accounting policy election, so that we use the terminology entities other than public business entities, which essentially is private companies and nonprofits. So on the next slide, disclosures. So if you use this practical expedient, then you have to disclose the use of it. And if a private company or nonprofit makes the accounting policy election, then they have to disclose the date through which they considered that subsequent collection activity. It's a prospective application and will be effective for all entities for fiscal years beginning essentially in 2026 and interim periods within those annual periods, and early adoption is permitted. So on the next slide, we have ASU 2025-06, targeted improvements to the accounting for internal use software, which we believe could have applicability to nonprofit entities, for example, that have developed apps for donations, or, for example, healthcare entities that have patient portals or online appointments type of software, or maybe even like universities that have course registration software and those types of things. So it is a broad-based issue that covers all three of the main sectors that we serve: private companies, public companies, and nonprofits. The issue came about in the 2021 invitation to comment that the guidance was on internal use software. The staged approach to capitalizing software costs was considered outdated and did not match how software is developed today. So sort of the old way that software is developed, is called the waterfall approach or a staged approach. And the guidance is really written, the capitalization guidance is really written for that staged approach. However, it didn't really fit in many cases. This sort of iterative approach that stakeholders told us about, where you maybe develop, one of the functionalities from start to finish before you develop other functionalities of the software. And so it was very hard to kind of determine when you should capitalize software costs. So the board decided to take this project on and make some targeted improvements to that guidance in subtopic 35040. It's effective for all entities essentially in 2028 with early adoption permitted. And then there are various transition approaches. So on the next slide, so this is a good summary of all the different changes. So what the board decided to do to modernize this guidance was remove all the references to a prescriptive and sequential software development method. So and just retain the threshold, and that the threshold is a sort of what they call the probable to complete thresholds, that management is authorized and committed to funding the project, and it's probable the project will be completed and the software will be used to perform the function intended. So it's judgment. There's judgment to be applied here to determine when you've met that threshold. In addition, the board decided to provide some factors or some other factors to consider in determining whether you have reached that threshold, especially related to significant development uncertainty. And those two factors involve whether the software being developed is still being revised, or and whether it's whether being revised or still subject to coding or testing, has novel, unique, or unproven functions that still need to be worked through, and whether the performance requirements have been identified, basically that the software is going to perform the function that it's been intended to serve. Additionally, the board decided to supersede the guidance in subtopic 35050 on internal website development guidance, and supersede that and incorporate aspects of that into 35040. So all internal use guidance would be in one subtopic. Disclosures, there's really no new disclosures that have been implemented by the board or introduced by the board here. There is an emphasis or a reminder that PP&E disclosures are required for all capitalized internal use software costs, regardless of how those costs are presented in the balance sheet or income statement. So, so on the next slide. So that's ASU 2506. ASU 202507 has two issues. The second issue really is not applicable to not-for-profit entities, but this is an issue related to derivative scope refinements. So as a result of the 2021 invitation to comment, we received a lot of feedback that the definition of a derivative may need, not the definition of derivative itself, but the definition of derivative scope outs might need to be updated. So the issue is that if your transaction meets the definition of a derivative, you have to account for it as a derivative at fair value with changes in fair value through earnings or the statement of activities, unless you're doing cash flow hedging, or you're doing some sort of, or you meet one of the scope outs. And there are certain scope outs that even if you meet the requirement, you're automatically scoped out of derivative accounting if you're in the context of one of those scope outs. For example, like weather-related derivatives or insurance-type contracts, they're automatically scoped out. But there were some that fell into a gray area where it was really undetermined whether they did fall in or fall out. And then there were the new transactions related to ESG-related debt instruments, where the payout or the interest rate was tied to meeting or not meeting certain ESG targets. And so the board decided to address this by adding an additional scope out, and that additional scope out relates to contracts with underlyings based on the operations or activities specific to one of the parties of the contract. So essentially, if that is the case, then generally they would be scoped out of derivative accounting. However, there are some exceptions related to contracts in own equity or underlyings that are based on a market rate, market price, or market index. Related to the performance of a financial liability. So just in GAAP speak or FASB speak, the exception or the exception to a scope out means that those transactions would be considered derivatives. So the scope out it scopes out the contracts with underlyings based on the operations or activities specific to one of the parties of the contract, but then there's these exceptions that would require derivative accounting. The predominant characteristics assessment is when you have multiple underlyings underlyings in that transaction or in that contract, and some of them would meet the scope out and others wouldn't. There's a correlation assessment that is performed. The ED, or the exposure draft, wanted to change that to a fair value assessment, but based on the feedback received from stakeholders, they retain the correlation assessment. So this is effective for fiscal years for all entities, starting in 2027, with early adoption permitted, with a prospective or modified retrospective application. Next slide, please. So environmental credit program. So as I mentioned before, the board has voted to issue this as a final ASU that is in the drafting process right now and will be coming out shortly. So the issue here is that there was no guidance for environmental credit programs, and the board decided to step in and provide some guidance. As you can see, these are programs, these are credits that are related to environmental credits that are designed to reduce or remove pollution or other types of environmental harm. And so the board decided to provide this guidance here on environmental credit programs to resolve the diversity in practice. And there are many, many flavors of these environmental credits. Some are from compliance programs that are granted by a regulator, and then may have been accounted for differently than those that were traded, and those that and also differently from those that were involuntary programs where the entity was voluntarily choosing to purchase or use these credits. So on the next slide, so the scope, what the board decided to do is to define an environmental credit asset and an environmental credit liability. The presentation is gross, so you cannot net these two. And like I said, there are many different types of these credits, and we won't get into what they are, but the definition covers the types of credits that are in the scope, and they are enforceable rights represented to prevent, control, reduce, or remove emissions or other pollution that is separately transferable in an exchange transaction. So they basically can be acquired, granted, or internally generated, received in a non-reciprocal transfer. They could be granted. And then the environmental credit obligation is the right or the obligation to that is where the entity is required to remit those credits to prevent, control, reduce, or remove emissions or other pollution. What's not included are really types of our tax credits or any kind of structures, tax structures that are for green energy type projects. The structures themselves and also the tax credits related to those would be accounted for in accordance with other GAAP. It also excludes asset retirement obligations. So it does encompass quite a bit, but there are certain things that are definitely out of scope here. So on the next slide, so the board decided, as I mentioned before, to include gross presentation on the financial statement, so that gross asset and gross liability presentation. And there are essentially three different ways that these credits could be accounted for. So you have to assess the probability that you would use the credit to satisfy an environmental credit obligation, or you would be selling the credit in a trading transaction or to another entity. And if it's probable that you will be using it, if it's not probable that you would be using it, then you would expense it as incurred. So for example, entities that maybe a nonprofit entity that acquires credits to satisfy the environmental obligations of others would expense that as incurred. Compliance credits and non-compliance credits generally would be required to be accounted for at cost, and non-compliance would additionally have to do an impairment test. You would reevaluate the intent each period to use those credits. However, it's a one-way street. So if you expense those credits, you cannot re-recognize those. They must stay expensed. And then there is going to be an accounting policy election for certain types of non-compliance credits for entities to be able to recognize those through a fair value option with changes in earnings or statement of activities. On the next slide. The liability side, again, a separate liability presentation, is split into two portions. The funded portion is those for which the liability for which you hold environmental credit, So you hold the assets already to satisfy the obligation. And then the unfunded portion relates to credits for which you do not have the credits yet to satisfy that obligation, and you would have to either be granted them or obtain them in some other way, and you would record those at the fair value of those credits. So you would expense and recognize a liability for the unfunded portion. On the next slide is various, so that there are new disclosure requirements which have been introduced for the asset and liability, both qualitative and quantitative disclosures, essentially to provide users with more information, useful information about those types of programs. On the next slide. Transition is it's retrospective, as if you had already always applied the guidance. Public business entities will be applying it for fiscal years beginning in 2028, and all other entities in 2029, with early adoption permitted. And as I said before, the final ASU should be coming out shortly. So for the sake of time, I think that's it for my section. We're going to jump to polling question number 7. Do you plan to use the information from today's webinar in your academic activities? A, not directly. However, the webinar provides a general update on the FASB's and GASB's activities. B, some. The information may assist in developing my curriculum, research, or other work. C, directly. I plan to use the information or my slide deck in my curriculum, research, or other work. And D, NA, not an educator. I know we only have a few minutes left. We are going to try to go over till 15 after 3:15 p.m. our time, just to make sure that the time requirement is met for the CPE. So let's see, we're at 84%. We might want to roll this out in a few seconds just for the sake of time. Okay, so I won't spend too much time on this, but it looks like you will be, the majority of you will be using this in some way in your curriculum, and we really appreciate that. So I'm going to turn it over to Jeff now for the last section.
All right, I'll be brief here. Thanks, Jeff. Let's move on to the next slide. So as you saw when we went over the FASB's current agenda, and including our research agenda, there really are no not-for-profit specific technical or research projects on the FASB's agenda at this time. Rather, there are some not-for-profit implications of some more general projects. So therefore, on this particular slide, most of what I've listed here relate to topics that were raised during the agenda consultation discussion that we had with our not-for-profit advisory committee at its October 7th meeting. And those are in the area of disclosures. If you have information about areas where information is lacking, and conversely, areas where requirements are outdated or the information is otherwise not useful, that would certainly be something that we'd be very interested in. In the area of not-for-profit consolidation and merger and acquisition guidance, if through your research you have observations on not only the navigability, but also, for that matter, the reporting outcomes, consolidate or not consolidate, merger versus acquisition accounting, and so forth, it'd certainly be things we'd love to hear about. With regard to operating measures and other KPIs, I talked about, when I was talking about the October 7th meeting, I talked about the debate about whether or not there needs to be additional standardization here. And if so, how? Should it be through a broad principle, or should it be through a specific line item in or out type of specification? So again, is observations about if standardization needed, and if so, how might it best be achieved? And then the one that we didn't talk about specifically in that agenda consultation discussion, but which I and other staff are always interested in, especially nowadays with the changing landscape in government funding, is are there further improvements needed based on the reporting that's been happening since the last time we made a major refresh of the grant and contribution model? That was back in 2018 via ASU 2018-08. Again, these are areas that we'd certainly be interested in if you have research that bears upon that. And as Jeff mentioned earlier, there is an academic landing page at the FASB where you can submit that. And our postdoctoral fellow, who is currently John Schumberger, will help ensure that the information is conveyed to the not-for-profit team. And with that, let me turn it back to Jeff. I think we have one more polling question.
Yes, that's it, and then we'll wrap up. So last question, how did you hear about today's webinar? A, social media, B, FASB, GASB, academic web pages, C, I received an email, D, word of mouth, E, other. We do encourage you, if you have other colleagues in academia who don't know about this, who don't get our email, we do try really hard to reach out to as many people as possible to advertise our annual webinar. And if you know of any of your colleagues who didn't get the email or didn't hear from us, then please let us know. We could pass it on and update our database. But we really appreciate all of your time today and your questions. And we're at 86% now, 88%. But it is important for us to know how you heard about us today. So maybe we could just sort of release the results. So you got an email. So 69% of you did. So the other 31%, please let us know, and we will update our database accordingly. We are really pleased that you have participated today. This is the conclusion. We'd like to thank you for your participation and your questions. As I mentioned, there's another webinar on Monday, and we do plan to hold this one next year as well. If you want to contact us, these are the various ways you could contact us. Jeff Mechanic and I are also reachable on the website. This is the web page for the technical inquiry service, where you could submit a question to the FASB staff, and we will get back to you with an answer to that question. Not necessarily any kind of technical advice, but how to answer the question in the codification. So we really appreciate your time, and we will hopefully see you soon. Do you want to say anything, Jeff?
No, I would just say I think we have one question. I'll read
Oh,
it
we did?
here.
Let me
Do you
see.
have a link for the webcast on Monday? I don't know if there's something we could, I know there's a registration page and all for that.
There is a registration page. We'll send it to you. We will send that to you. Okay. All right. Well, thank you very much. Thank you for your time. We hope to see you soon.
Thank you all so much.
Bye-bye.